Welcome back, guys. All right, cool. So today we're gonna get right into it. If you haven't watched the introduction video, if you haven't watched the 5 tips video, go ahead, take a look at that. But we're gonna get into it. I'm gonna go over one of the trades that I've taken. It's basically one of my entry models. One of the things that I really look for when I'm trading, because those type of entry models for me play out very well and very consistently as well. So we're gonna go over. I'm gonna give you the breakdown, the narrative, and how I got to the point where I even entered the trade. The next clip is gonna be my actual entry and everything like that. I recorded all of it, so you don't have to say, oh, he's only saying this because he's back testing or he can see it. I actually took the trade, and you could go take a look at it right now. Okay, and now we're back. So now we're looking at the chart, right? So this was on December 4th where I took this trade, and I'm just gonna start breaking it down like this. I'm gonna start looking how I look at the time frames and how I put everything together. I'm gonna talk very smooth and very slowly, so hopefully I'm able to iterate and say everything that I want to say in a nice manner. Now, if you're confused about anything like that, just go ahead, leave a comment, and I'll break down everything for you. And any questions you may have, I will help you. I'm here for y'all. Okay, so I like to do my higher time frame analysis, which will be the daily, 4 hour, and 1 hour. So those are the 3 time frames where I really look at structure, and then I look at areas of interest, which are the fair value gaps and liquidity. So as you can see on the daily, remember, we're going, trend and areas of interest. So that's the 2 things I look for. So what's the trend on the daily? We're bullish, right? Okay, cool. Areas of interest, down here, we got a fair value gap. That's pretty far. And we have another one right here, which is also at a high. So it could be very reactive off of that area, but we're kind of far from that. So I don't see price going there that day. All right, so we go to the 4 hour and we start marking things up. I have everything on hidden right now, but we're gonna show everything. So we have this 4 hour fair value gap right here. All right, cool. And what's the trend? All right, so now we're on the 4 hour, right? So remember, trend and areas of interest. So where's the areas of interest? This fair value gap right here. Yeah, you have more down here, but if it starts breaking through there, it's going to be, this is a 4 hour time frame. So it'll take a good amount of hours for it to get down here if it's moving normally. If it's not moving normally and it's moving crazy down like that, I am not going to feel comfortable trading long or trading bullish. So again, what's the trend? 4 hour bullish. Where's the area of interest? This fair value gap. Another higher time frame analysis, 1 hour. All right, what's the trend? Bullish. Where's the area of interest at? You have a fair value gap right here. All right, now we're gonna show everything. All right, so we have the area right here. We have the 1 hour fair value gap. It's kind of intertwined with the 4 hour. So I kind of just kept it as that. All right, so now we could go down to the 15 minute. We could look at any areas of interest as well. What's the trend? I like to use the 15 minute. This is where it gets kind of different. So the 15 minute will have an extra responsibility, and that'll be confirmation. I like to see the trend of the 15 minute going the way that I want to go. Now, if it's bearish, there has to be a lot of extra higher time frame context for me to trade against the 15 minute trend, right? Usually I like to use the 15 minute trend as a confirmation of, yeah, let's keep going this way. Again, everything plays out differently when you're looking at the market. You have to really back test things, really study things. So where we at right now, the daily, 4 hour and 1 hour, you're going to look at trend and areas of interest. The 15 minute, you're going to look at trend, areas of interest, and price confirmation, meaning is price bullish or bearish in this time frame. You want it to align in the same direction you want to take your trade in for that day. So for me, 15 minute is bullish. Like, yeah, everything's lined up. So this is where I started the session, and I wanted to go long. I knew I wanted to go long. So what I did was I waited for price to pull down into my area of interest. Remember this 4 hour and 1 hour fair value gap, right? I wanted to see price come down into it, take this liquidity and push up, and then I'll look for my entry model. However, right, this is a very specific entry model. You're going to be looking at SMT divergence and inverted fair value gaps. SMT divergence basically means that another asset class, in this case the S&P 500, took this low, but NASDAQ didn't take the low. So they're not matching. So usually when they're not matching, that means one is lacking. And when one is lacking, that means one wants to go the other way. In this case, NASDAQ was lacking, meaning it wants to go the other way. So S&P 500 dug into this fair value gap. NASDAQ didn't. So now, as you can see, there's a nice fair value gap right here on the 1 minute. All right. Now people, remember, money moves the market. Now people are going to be shorting from that fair value gap. All right. And that's exactly what I wanted. I wanted people to short from there so I can long through there. All right. So we're going to see right here, boom. And this is where I took the trade. Took it at 10:04. So we're going to wait. Actually, I took the trade right there at 10:03. Always 100 tick stop loss. And now this was more of an aggressive entry. This was more of I'm more confident and I'm comfortable taking this kind of trade because I back tested, I studied, and then I analyzed, right? A more conservative way is waiting for this fair value gap to be inverted, right? As you're going to see soon, right? I always target a 1 to 6. That's like a good day for me. That's what I like. That's what I'm comfortable with. It all looks different for everybody. If you like targeting other things, go ahead, back test it, analyze it, study it. How did it work out for you? Right. Now, if I was being more conservative, I would have to wait for this to happen. And usually when price wants to move and you're on the right side of the market, price is going to move fast. So that's why it's your job to really understand what you want to do. And when it's time to act, you act. You don't really hesitate. So that's why I took my trade down here. Because again, I liked what I saw and I was confident in my trade. And as you can see, the trade played out. And that day specifically, I aimed for a 1 to 2 because of these highs over here. So you can see the trade the trade played out perfectly. So if we can go back, just to recap it again, daily trend and areas of interest, right here, this fair value gap, trend is bullish. Another higher time frame analysis, trend, which is on the 4 hour, trend, areas of interest, this fair value gap, and the trend is bullish. 1 hour, higher time frame analysis, trend, bullish, areas of interest, fair value gaps down here. 15-minute, trend, bullish, areas of interest. Not really any clean fair value gaps that I liked, so whatever. But 15-minute confirmation, bullish trend. So now everything is bullish. I love everything. Let's go to the 1 minute. Let's look for that entry. Waited for price to pull down. Didn't take that low, but it was an SMT divergence. And if you don't know what that is, I'll have a video on that very soon. So there was a SMT divergence right here with a fair value gap. I took the long before the fair value gap because I was very convinced on my analysis and I trusted myself. So I took it right before and I was able to catch this move. And that was my trade, right? Let's see, hindsight, if we did wait. Like I said, more conservative. Let's see if I did wait. And let's see if we were able to get it, right? Look at that. You have still been able to catch a nice trade. Look at that, 1 to 2, even almost 1 to 3. I don't know. Let's see. Boom. But 1 to 2, right? Even if you were conservative and you waited for that fair value gap to be inverted, you still would have won. Again, my trade was down here. And for a 1 to 2 that day. And we all do things differently, right? So it's important that when you see these things, you back test it, you analyze it, you study it, right? Remember, trading is super simple. I know that I just went through this probably like in 10 minutes, I don't know. But it's really that simple, right? When you look at higher time frame, they always talk about higher time frame context. You can use the 4 hour, you can use the daily, 4 hour, and 1 hour. Those are your 3 higher time frames. Remember, trend, which way is it going? And then areas of interest. That's all you need. 15-minute, trend, areas of interest, and confirmation. Is it going the way that I want to go? All right, that's it. 1 minute, find your entry, find some good. Wait for those 1 minute candles to go into the higher time frame areas of interest. And once that 1 minute goes into those areas of interest, then you wait for something like that, an inverted fair value gaps. You wait for some kind of divergence, right? You wait for something to confirm or just to show you that price wants to keep moving up or keep going down. It's really that simple. Trading has become so complicated that now everybody has this analysis paralysis. They see things and they want to make 1,000 different perspectives off of it. And that just hinders a lot. So my big tip after watching this is keep everything simple, because it really could be that simple. So with that being said, thank you guys for watching. Stay tuned for more tips. Again, if you guys have any questions, you want me to talk about anything, go over anything, just leave it down in the comments, and I would love to do that for you guys. Thank you. Until next time.